There's a few indicators I do use, but I'm not an indicator trader, right? So I'm gonna share with you some of my secrets when it comes to my indicators. Because I'm not an indicator trader, I'm a price action trader, meaning technical. I just look at charts and that's only. So this I'm currently reading this book now. This book is I'm reading. Yeah. Indicators go over here for my favorites. I have something called moving averages, moving exponential, and this one and this one. Now this one is something amazing. I think guys you will like this. Reason being, I'm gonna show you guys something. Is it this one? Inputs? No. Yeah, this is it's this one, and then this one as well. Right. There we go. So these two. So EMA. Go to the EMA, and then so you're gonna select EMA. Number. Choose a 21. Okay, why not 21? Right. Like that. Okay. And then the red one is going to be SMA, right? Make it 50. Okay, it's going to be like that. So what I'm going to say, what I can tell you is that I like to use on a 15-minute and then on the 5-minute. Okay, 15-minute and 5-minute. So of course you'd have to so this is the moving averages, guys. Now what is the moving averages? Moving averages is basically like these lines. It's a dynamic support resistance. Here at the bottom it acts as support when you're in an uptrend, and when we're in a downtrend it acts as a resistance. Let me show you guys when I look for downtrend. A good downtrend. There's no downtrend here. Where's downtrend? There we go. As a resistance, it's on top of the market. It's like on top of the candles, and that's a resistance. Meaning when it comes to the trend line, when it comes to moving averages, we sell. But when it goes under, like if you look at here, it's under it, right? It's under the candles. We're looking for buys. As you can see, every time it comes to trend, every time it comes to moving average, we buy them. So how do we actually use this? So first of all, I always do my analysis, guys. First thing first, we always do analysis. It's very important. And yesterday, with what I did see is something like this. Okay, we have a trend line, guys. Remember I explained to you trend line touches and stuff like that. Or maybe let's make a video on how to use trend lines. All right, comment down below if I should do that. So I did see that here's a little pattern that I have here, and once it breaks out, retest as we start buying. So what then happens is the market is moving in between. When it does in between like this, you shouldn't be doing anything. You don't want to do really anything when it looks messy like this. But it doesn't mean that you can't take trades in between, like here for instance, right? When market breaks out and it goes above, you can take sells, right? But I'm not looking at that. I'm looking at the major move, the actual major move from this whole thing. So what happens is market is the moving average is in between, you do nothing. It means you stay out of the market. But as soon as market broke out, as you can see here, if I have to just fix this like that, right? You can look at it like, I think something like that, yeah. Touch into the future. It broke out, came back for retest. When it retested here, okay, I found another area here. That's my auto, but you can take that auto. So you can do it like that, and then as soon as it break out, okay, and this moving averages start going under, from being in between it and start curling under, and it breaks above. I mean, you start taking buys, and you can see what happened yesterday. It went all the way higher. That is basically how we use the moving averages. I use the moving averages in that manner. For instance, let's use another example. Another example here. Let's see another one. Here's another example, eh? So you can see if I have to zoom in, this is also a buy one, yeah. So you can see here's a trend line touch here, trend line touch here. Where am I looking at that? It's one touch, second touch, right? And one touch, second touch. It broke out. Is it for me? Yeah, please. 1, 2, and then it broke out, right? It broke out, and it's in between. You relax. Once this moving average curls under to take the buys, you start taking the buys, and look what happened. Market shot up crazily, yeah. So that is basically a confirmation at the end what you should do, yeah. Let's look at this one again. There's another one. It's more like buys because this is Nasdaq. So you can see we have a downtrend, right? Every time market touches it, you sell. But I'm looking at, let's just look for this one where it breaks the trend line. So it breaks the trend line, comes back for retest, right? You get the candlestick confirmation, and then you wait for it to curl under, right? It starts curling under, it's like buys. Let's say you place the buy here in this area, just above here where you start to close here, somewhere around there. And you place your stops under this areas, and you take your take profits all the way higher. using the Fibonacci from this low to this high here, right, like that. Take profit's gonna be all the way up to here with the rest root of 1 to 3, and let's see what happened. Boom, 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 boom. You in profits, and take profit hit on T over there. Yeah, and it's more increase as you go by. There should have been more increase, and if you have to hold it, market went even higher. You guys see that? So that is basically the power of a moving average if you use it correctly, guys. That's it. If you use it correctly, it's gonna work powerfully. So yes, I was actually online and I had to stop the thing and I had to come back because I had online with the students. So let's go over this again, guys. Right? What is now? You need to understand it. Let's put it like this. Let's actually put it like this and explain to you guys. So so first, what is the moving average? Now, many people want to know, okay, I don't know trading, I don't know Forex, I don't know, what are you talking? So what is the indicator? Indicator is basically a system, or basically like a system that helps you to indicate whether you buy or sell. It's like a confluence. It's actually, it's more evidence to take a trade. Now, what I do is I use a moving average. Now, what is a moving average? A moving average is like a dynamic support resistance that helps you to tell you when to buy or when to sell. Like if the market is still in the uptrend or still in the downtrend, or if the market has changed direction. So that's a moving average. It calculates the last, like every time you saw it shows 21, that's going to calculate the 21 closes for that particular time frame I'm on. So if I'm on a 50 minute, it's going to close, it's going to use 15 candles on the 50 minute to tell me to calculate 21. So it's a new system. Let me just go with that again. So moving average will, like, if you're on a 15 minute, right? Then on a 50 minute use, and I use a 21 duration, like I saw I took 21 and I took 50, right? So it's going to take the 21 and it's going to take 21 candles on the 15 minute and use the close of those 21 candles, right? It's like maths. I'm not too maths, guys. But then you get the 50, right? If you want the 50 minute as well, to take the last 50 candles and calculate the closes of those 50 candles and use the average of those, and you use like create like a support resistance. Now, why do I use this? I use this for like some sort of indication. We're still in uptrend or we're downtrend, but I don't use it as my sole main thing. You need to have other technical analysis combined with this will make bomb. Now I don't know. Let me show you guys more examples, and then we can move forward with it, okay? On different time frames as well. We start, right? So first thing, I'm on a daily. I'm using a different time frame on a daily, and I'm gonna take a trend line. I'm gonna identify what trend we're in. Okay, so I can see here we had a downtrend here. Just as back test with you guys, okay? Downtrend, and let's put the moving averages stuff back on, right? And here we go. So we can see, all right? Every time the market, so we have little counter trends here. Okay, so we're gonna have this as a counter trend like that. Okay, something like that. We have a counter trend there, we have a counter trend there, we have many counter trends in between here, but let's not focus too much on the counter trend. If you want to know this, then let me know what's a counter trend. I'll explain to you guys further, but let's just, if you want that, comment down below and just focus on this one. So we got the trend line, market comes back for the trend line, but we're not how do you say, confident to take the sell there. So market comes out, we wait for it to break this trend, boom. Once market starts closing over, and the moving average starts coming across nicely, and it comes back for a touch, and the trend line again, and it closes again above it, over like that, closes. What we do is start taking sells, right? So let's say we took a sell right there. Okay, stop loss could be maybe about this area is there, and you have to keep it all the way down. You take profit could have smashed. Here we go. It's basically that. Let's say here what happened is market then broke out of this trend line. We wait for the retest, like you guys watch my other videos. Break, retest, and it tests the structure again. So let's say like that. Your structure here, right? This areas, structures right here, right? It breaks above, tests that areas, and now from being above, which is for sell, that moving average comes below, under, and look for buys now, and it broke the downtrend line, and in support now, you buy support, and then you pull your Fibonacci out, right? See all the confluences are from this low to that high there, like that, into that 50%, right? Now the moving averages are curling, it's a support, and it's a trend line, it's testing, it's creating a new trend. If you have to actually look at it, let's delete this. So targets will be at this area, so I'll buy here, right? The stop loss can be under this areas like that. Your take profit can be all the way high till here. Okay, let's move at Fibonacci. There's more confluence. Why you take this trade, and you see why I'm adding the confluences. If you pull it like that all the way up into there, there's a trend line as well there, and now I can remove this trend line away, and there you can understand it's curling now, you know, and I can keep taking buys as the market goes higher, and you can see when market came back to this trend line, we take a buy, right? You can see it came back to the trend line. Okay, if I just look at it, sorry, I'll move it nicely. There we go. And then fix it here. Like that. There we go. You see into the future. And there you can see we had a counter trend here, like let's say when I spoke to you guys about the counter trend line like that. You can put it, I think it will be in place like that. And then now what happened, market came back, the moving averages in between, but as soon as you start curling under, right, so under, you start taking the buys and market went higher. That's basically how you use moving averages, guys. I hope this guys added value to you. Don't forget to like, comment down below, spam the comments, let's get it going. Guys, I love you guys. Share my love to you guys. Stay blessed, guys. Don't forget to like, comment, and share. Right? Comment down below. It really assists me. It's like where I get to mentor with you guys. I keep on saying this. I get to mentor one-on-one with you. You know, I mean, it's free. Comment. You know, I get back to you guys. You see, I always get back to you guys. But yeah, guys, this is how I use my indicators, my moving averages. Yeah, let's get it going.